Hey guys, this is Martin from HIGHS, the channel for learning about trading and investing. Welcome to a brand new episode of the weekly stock market analysis for the upcoming week that's starting from Monday, July 1st, Monday 2024. It's a lot of exciting things are there ahead in the slides where we go through that. So basically we look at the technical charts and then try to understand what exactly happened during the previous week in the market and plan for a better trading for the upcoming weeks that's starting Monday. So let's jump into the charts first and then we'll come back and wrap it up at the slide. So here's a weekly view. Don't worry too much on it. It's just indicative of the breakouts and the rally that has been happening. Cup and handle and multiple flank breakouts seen on both indices, left Nifty, right side Banknifty. Same is seen here. The market is within a range and you can see the cup and flank breakouts, and then Nifty has hit the channel top and Banknifty has some more to go before it reaches there. This is a daily view where price is moving in a parallel channel on both indices, and it's been moving up since last 1 year. You can see how it has been consolidating in the beginning of the year and then how it was steadily moving up in between, having an election volatility that broke all the rules. And here is the candlestick view where the Nifty weekly candle is showing solid bullish wide range candlestick, weekly candlestick. And if you also look at that solid wide range bullish candle, some of the gains have been profit booking has happened there. You can see it on the fixed size, but this is the 6th week of making new all-time high. It's a new record high above 25,000 and about 53,000, and it's the 6th week of consecutive all-time highs on the Nifty, and it's the 2nd week in the case of Banknifty. So market heated up pretty much at the very top. Consequence is absolutely bullish on the weekly. The daily charts, see what has happened on the Nifty. We have a consecutive 4 days of higher highs and breakouts and new all-time highs, and then Friday have the bull snap, which means profit booking. Banknifty also broke out almost all the days except for the last 2 days when the profit booking was some kind of retracement less than 2% has happened in the Banknifty. That's what the charts, but it's bearish close as per the candlesticks on the daily charts are concerned on the Friday last closing, while on a week-to-week basis it's absolute breakout and extreme bullishness that you're seeing above the big rounding numbers of 50,000, 53,000 on the Banknifty and 24,000 on Nifty. Who would have imagined that markets will hit 24,000 so fast, right? It was a spectacular rally that has happened so far. There's no doubt about that. And look at the Bollinger Bands. It's expanding. It's not exactly walking on the bands, but it's very close to the bands, rising up on an expanding band on the daily charts in the case of Nifty. And that shows the extreme bullishness. The more it moves away from the median or the 20 moving average of the Bollinger Bands, the more likely that it can fall back there and then once again continue the rally. It's quite run up, but it's still expanding on the Bollinger Bands on daily. Banknifty also actually it's walking on the bands, and it has fallen down the last 2 days from the bands, but the expansion continues on the Bollinger Bands, which indicates bullish biased. Let's conclude what exactly happened. So as I said before, it's the 6th week of new highs that's being made on Nifty, and the 2nd week on the Banknifty. It's Banknifty close about 25 and it's wide range bullish candles, positive close of 2.17, so that's 509 points in last week. The rally has extended itself 43% rally from the last March 2023 onwards, with multiple rounding patterns and flank breakouts. Banknifty also absolutely bullish with wide range bullish candle formed with less than 1.3 from 676 points cleared, and still above. Both are still above both indices, above the 20 weekly exponential moving average, weekly exponential. And while in the bank feeds around 38%, and that also we've seen that it has happened with cup and handles and multiple rounding pattern breakouts technically. On the daily charts, we see a flattish close with 34 points of green forming an inward hammer on the Nifty and a wide range bearish candle for 469% of loss. That's an 8.89% of cut on the bank. The Banknifty has corrected sharply, or performing has happened more intensely on the Banknifty on the last Friday, Thursday. But it's still above the 20 exponential moving average, so it's just profit booking. So basically, market broke out and then conquered the 24K and started heat up at the peak, and profit booking would come in further and more retracement come in. It's a stellar rally, but yeah, market does not work like that. It simply cannot go vertically up and up forever. It just has to retrace it. Be mindful of the fact, and this is ahead of the July 22nd of summers in that time frame where we have the union budget for the first budget of the new government, coalition government has formed. So a lot of speculative, volatile moves can be seen in the markets in the upcoming days before the budget and after the budget. Once the market reacts, then we have either a big fall or a big move that can happen. That depends on what's the outcome. How does the market judge on the outcome of the budget? And both demand is bullish bias, we have already seen that. So that's it. Let's get to see the support resistance levels for the Nifty first. So obviously it's an all-time high at 24,174. That's the first resistance now. And if that is taken out, it can climb up to 24,200, 24,300, 400, 500 likewise. Where only it's an uncharted zone where the rounding numbers could be assumed as resistances. And also keep in mind that if you consider the election swing low as along with the Fibonacci extension, we may see that on the TD charts it has exceeded the 61.8% Fibonacci extension. So anything beyond or below or up, 61% is very crucial. So it is exactly where the resistance has come in, so we have to be mindful of it. But also it has hit the top of the trend line channel, so I'll be cautious about some potential reversals from this zone. And if you look at support resistance levels, the first supports could come in at 24th of July. Obviously holding that is crucial, and below that 23,500 will be a number. That is where the 50% Fibonacci extension levels comes in. The 20 exponential move comes very close to that exponential moving average. 23,417 is where it is. So that's the first support zone, and then 50 exponential moving average set very close to 23,000. So that's also in confluence with the rounding number 23,000 and Fibonacci extension 50 and Fibonacci retracement 23, sorry, and the 50 exponential moving average. So it's a confluence zone. So 23,000 seems to be very, very good support zone. If at all retracement from 24,000 point fall comes in, that's where the stronger supports could be found. 50 exponential moving average zone, and if that is also breached, it comes to the 23,500 nearby zone, where the 100 exponential moving average zone, which is coming in confluence with the 23.6 Fibonacci extension zone. Okay, and 200 exponential moving average is way down there at 21,500 nearby zone, so long way to go. Before that we have 22,000, so a lot of supports, and bringing out retracement could come in, but these are the zones where you have to watch out for supports and resistance on the Nifty. Banknifty, if you see, that's also the all-time highs for 53,000. There's some retracement has happened for the all-time high, so 53,000 is a big rounding number, so that's going to be a zone of resistance for the move up. That's also exactly the same zone where the 61.8 Fibonacci extension zone is. That's the value where it is. Otherwise, that's the trend line top of the channel. So that's a very crucial zone. Having a weekly close or a daily close above 50,000 is very tough. That's where the resistance is going to come in. And the first pull, the resistance after the 53,000 would be uncharted territory. So obviously it will be 53, 200, 53, 300, 400 likewise. To know, you never know where it goes, right? But it will take its own sweet time to do that. So retracement, I would expect that retracement could come in before that. So the trending expansion moving average is at 50,900. So 51,000 nearby zone is going to be very crucial support zone because it's coming close to the 38,000 Fibonacci extension level as well. So before that is the Fibonacci extension level. So 53,000 is resistance and henceforth also resistance. So below 50,000, now that the 53,500 would be is already gone because the support is gone. So 52 would be the first big rounding number support. If that is breached, 51,500 and then 51,000 where the 20 exponential moving average is coming, and then 49,600 where the 50 exponential moving average is coming, and then so then the 100 exponential moving average zone is at 48,500. So basically, if the 53,000, if the 52,000 is breached, the next support would be 51,000, and we may have 50,000 500 supports that may come in between, but that's between exponential moving averages. So that is breached, then it can easily go 1,000 points towards the 50 exponential moving average, and then so likewise. So yeah, so basically we are trying to find support resistances based on Fibonacci retracement levels and the previous resistance support zones and the moving averages. That's it. And if there is any gaps, we consider it for support resistance. So these are the different ways. So that's how these levels are. So there are no gaps that's found. We only have the 20 exponential moving average and Fibonacci retracement and extension levels. That levels are indicated on this. So that's about Banknifty. Moving ahead, you try to understand how the momentum and the trend indicators. Basically, it's RSI that's used for understanding the momentum and trend. For that, we use the DMI indicator. That's ADX indicator. So ADX shows strength as well as whether it's bull or bear zones. So that's applied on multiple time frames on both the indices, Nifty and the Banknifty. Left side is seeing the weekly. So weekly absolutely bullish and rising. And on the daily charts also, Nifty and the Banknifty, the momentum is absolutely bullish, but it's slightly falling, right? But yeah, momentum is bullish on both time frames after a long time. That's a good thing. And ADX is also bullish now on both indices, right? Bullish on short term and bullish on weekly charts both, right? It's slightly falling in the case of weekly. In the medium term, the trend is slightly falling in the case of Nifty, but absolutely bullish momentum and the trend is what you're seeing overall after a long time. So market is at the top, absolutely extremely bullish. Extremely bullish. That's a word for that. Moving ahead, if you try to understand the volatility with the India VIX, we can see we already seen the huge volatility during the election times. But 60% of crash happened after the 125% spike on the election and the pre-election times. Now that is all gone history, and it has fallen, crashed down to the levels of 11, 12. Now it's once again spiking back, and it's nearly 5% spike, and now VIX is now 13.8, but still at the low volatility regime. Otherwise, the implied volatility to realized volatility spread difference is still negative 57. It's not that great for option selling, but IB personnel seems to be okay near to the 70 levels. But overall, it's not in much favor of the all. As per the volatility, it may not be great for the option sellers right now, right? If you study it that way. But market is in the low volatility regime. Now the next one is the open interest analysis for the Nifty futures, and showing slight contradiction between Nifty and Banknifty. So it's a bullish Nifty with a short covering the futures open interest, and the Banknifty showing short build-up on Friday. Futures saw high. Now the options saw high for the July 3rd Banknifty, July 4th Nifty. Weekly expiries, that's coming. It's a mistake here, sorry. It's a weekly expiry. We correct that right away. For that, the PCRs, again, there is contradiction between the Nifty and the Banknifty. Nifty is bullish, while Banknifty is slightly bearish. 0.64 PCR and 0.99. So there is contradiction between Nifty and the Banknifty. The more correction has happened in the Nifty the last 2 days, than on the Banknifty than the Banknifty. Same is reflecting on the options as well. with the short covering and short build-up difference, contradicting performance from the indices. That's what you should be mindful of that. If you try to understand the levels, look at this. It's a very tight range in the case of Nifty. The highest put writing is seen at 24,000 and highest versus seen at 24,500, just 500 points. And we have another 4 days for trading for the next weekly expiry, June 4th. Now 23,500 and 24,500, 1,500 ranges were the second level of highest put and call writing is seen. So relatively, comparatively, they try to range where the option writers are betting on. But in Banknifty, we have a slightly wider range. The highest put writing is seen at 51,500 and the highest resistance at 53,000. Second highest open interest writing is at 52,500, and that's the same place where the highest call writing is also the second highest. Call and put writing is what we're talking about. You can see those in the green indicates the supports, and that's the put writings, and the red indicates resistance, and that's the call writing. That's about it. Let's try to understand what and how the sectors are performing, the sectoral indices. It's not very encouraging this week. If you look at not too many sectors that's available for straight away long positional opportunities, right? We just have the auto and the pharma, which is having bullish momentum in the medium term and the short term, right? But others are all having a lack of momentum on both time frames. But overall, if you see, it is a green recovery, good recovery has happened across sector. But sectoral indices, we just have two of them just leading the market. We probably may need more, but IT sectors come back aggressively with 2.7% of movement, forming a wide range bullish candle, and short term and medium term momentum is bullish. No, not the medium term sideways, but a big comeback is something like 3% up more. That will also come back with 2%. Oh, yeah, there's a mistake here. Metal also had a downfall. Metal was downfall, and momentum is not ready for long versions. Auto sector is flattish up move. Pharma sector just 1% up move. That's what. And those are the two sectors, auto and pharma, only two sectors which are absolutely remaining the bullishness. But a recovery of 1.4% has happened on the FMCG as well. Right? In addition to the IT sector, FMCG also has recovered. But reality has closed down with 2.5% nearby fall, and the momentum has gone out of control. Not ripe enough for a long position. So sectoral indices are not that great, but none of them are in bear zones. It's still sideways and then recovering and then climbing back. And we have two of the sectors that's leading, which is our positive. You can see this IT sector and risk up and handle breakout is on the way. IT has performed well. It's crossing out of the bull zones. Momentum and trend both are absolutely fine. And it's heated up at metal at the top. Some retracement consolidation happening there. Momentum is bullish on the medium term. Auto sector at the very top, tracing, consolidating, but momentum is absolutely bullish. Heated up pharma sector at the top, consolidating, momentum is still bullish. FMCG, some retracement, consolidation, trying to get back to the bullish momentum. Realty sector at the very top, heated up, momentum is bullish. So momentum in the medium term is absolutely bullish in almost all the sectors, if you look at the sectoral indices. Now let's try to understand the industry heavyweights. The heavyweight stocks that contribute maximum to indices. The HDFC Bank to begin with, its volumes, above moving average volumes, busting out, breaking out, momentum to the bull zones above RSI 60. But we have a trouble that's coming there. We are getting closer to the previous all-time highs, 1733 nearby zones. So all fingers crossed at this point. You never know what happens. HDFC is the highest contributor to the index, and if it is breaking out, the market can easily hit 25,000 just like that. But if there is a retracement coming, you never know when it's going to end. It can probably go back to the channel bottom or find a support in the trend line zones near the 1,600. You don't know what happens. So all eyes would be in that. But as of now, all hopes by the bulls with regard to the HDFC, because that's biggest index contributor, and that's finally on the bull zones on medium term, absolutely bullish. Reliance also climbed back the bull zones and broke out of the flag pattern. There's a long way to go. It can go to the channel top. That's a long way, another 500 points or so. So that's another second highest index contributor. Reliance breaking out. IGSA has always been bullish, never really fall down in the sideways zone itself the last several weeks or months to say. Once again, is breaking out and it is getting close to the top of the channel. Once it is at the top of the channel, we have trouble again. So gotta be slightly cautious on the ICICI Bank, but absolute bullish in the middle term. So all the three major index heavyweights, HDFC Bank, Reliance, and the ICICI Bank, are in the extreme bull zones in the medium term. Now come back to the IT, which recorded last week. Yes, it is still not managed to climb the bull zones, but trying to rising momentum. FedEx Consultancy TCS also not at climbing the bull zones, RSI 60 on the medium term, but probability of a breakout of the flag is possible. Yeah, two sideways, IT stocks, but rising momentum seen there. Kodak Bank always sideways and remains sideways. LEC also remains sideways and trying to consolidate at the top. The breakout from here could is a probability. You cannot roll it down, or it may go further down within this flag more, and then whenever it finds time, it gets in the mood, it breaks out. But sideways as of now. So all of these stocks, the Kodak Banks, the IDC, the IT stocks, Nifty and TCS are all sideways. All these three biggies, HDFC Bank, Reliance, and ICICI Bank, are in extreme bull zones. We're talking about medium term weekly charts. Now we look at this mid cap, we brought an index small cap. It remains to be the top, and it was green close, bullish momentum at all-time highs. Absolutely bullish. Coming to the institutional participation, we can see that after a long time, FS seems to be more tempted towards buying. It's a 4,600 crores of buying that happened in the Fyers last week, and DIS was buying double of that, nearby 7,186 crores. They've always been buying DIS, but FIS were mainly sellers, but looks like they're showing some signs of buying for the last 2 weeks, and that's why the market is breaking out from 24,000 just like that. And the derivatives and the FI DI betting net longs also has moved up. You can see that. Yeah, on Friday's data, the FNO data of the FI shows that they're bullish on the options and the futures both, while the clients or retailers are not that bullish enough. And so overall, institutional participation is turning bullish, which is what is making market to the extreme highs, and that's positive, right, for the market, no doubt about that. And now we come to the global markets, which in the sense is the US market, mother market, stock market we're talking about, and the global commodities like the crude oil and the gold. And we look at the currencies as we look at the currencies. Dollar index flat is close but green on a 5.84. And sideways rising momentum as well. Dollar itself, you can see that it is a cup and handle pattern, and then it's consolidating and not breaking out. Flattish USD INR, it has been consolidating since ages. Rupee remains with the peak, sideways and falling. It's at 83.3, and last week was 0.25, 0.25% down. So that's slightly positive, but as long as it remains above 83, doesn't make much sense. Rupee remains weak as well, and momentum is sideways and falling. Yeah, so no major big indications from that currency side. Yeah, the crude oil seems to be hitting the top of the trend channel once again. Danger zone. Just climbed to the 81.44, and there is a possibility of a breakout from here, which could not be very encouraging for an oil importing company like ours. But momentum is still sideways and rising. So as long as it doesn't climb over the RSI, even the trend indicator, ADX also has crossed over the bull zone. So there is a possibility for an attempt to break out from here, which is not that great. So you have to be cautious on that. Crude oil has been gold. The hedging instrument is maintaining the momentum bullishness on the medium term. but it's basically consolidating within a very wide range after hitting the all-time highs. So gold has actually moved up 0.2, just flattish up move, that's all. But momentum is rising and it's bullish, and it's 26% move that happened earlier when it hit the all-time highs. Now it's consolidating like we've seen. And now comes the US market. We have a flattish indices close that happened on all the three major indices: Dow Jones, S&P 500, and Nasdaq, all of them, right? Flattish close, but remember it's at the all-time highs. At the all-time highs, we are having an indices close. Always just trying to manage the bull zones RSI 60 levels. So that's what it is. So no great news from there. It's it's not indicative of anything. No major indications are given from the study of the global markets, except that it's indices and it's at the top. And there's some concern regarding the crude oil rising up, but it is not broken out, still sideways momentum, right? Currencies as usual. So that's the nutshell of the global review. So now let's get into the stock market action. Numbers, two stock picks for the next example of Fyers. There's a good potential for it to move to the channel top. It's kind of a flag within a parallel channel. Consolidation breakout could be possible. Momentum is really good in the bull zones. Trend is close to all the bull zones. Trend indicator ADX, and the volumes are extremely good. Volatile. Tire manufacturing company. Petrol net. It's a semi-government oil and gas company where consolidation breakout is shown here on the flag pattern, and there is a good risk reward. Momentum is bullish, trend is bullish, volumes are good above the moving average, and good risk reward. Have tight stop losses, right? If the flag pattern breakout works, then you make money. Now we have the payoff actionable on the weekly options trade strategy. This is basically a bear call calendar spread. We're selling 24,100 ATM call options, and you are buying the next to next week, right? Expiry is 24,100, same calendar vertical spread, bear call. So you get a reasonable good range. Your market is not supposed to break more and fall below the 23,800 levels in a week, and market is not likely to go and hit the 24,450 range. So reasonable range we get. Risk reward is also okay, but probability of profit is little not that great. So just get out and then book your loss if it is having a big reversal that happens, right? But if consolidation stays there at the 24,000 nearby levels or 23,800 nearby levels, then you make money, right? Otherwise, book the loss and get out with tight stop loss. That will not wait for the last expiry day. So that's be a core calendar vertical spread on the weekly Nifty options. For it's an actionable. It's not a recommendation, but for educational purpose, you can go to do virtual trades, or at your risk, you can take the trade as well if you think your view matches with my view. This is my view. Now that we have gone through the different aspects and different parameters, just technically on the charts and otherwise, we'll just wrap it up and conclude. So we had a big breakout week that went by, as seen in the big wide range bullish candles. So market hit the all-time highs continuously, week after week, and then now 24,000 K is also cleared. And still the price is about 20 exponential moving average, and we just had 10 to 11% correction even when we had a major election event, and then rally is 43% on the Nifty. Can you believe that? And 38% since the last 1 year or so. So let's try to analyze what factors are showing. How do we conclude and get a view? We put them in the buckets of bulls and bears. So the bullish momentum and the trend, now that it has come into both the dice, weekly and on the daily and the weekly, so that's very positive bullishness. And having a close price about 20 exponential moving average, and 20 daily and the weekly moving average is also extremely bullish. And DEVIX it's not in the scary levels like it used to be in the election time, so it's still in the low volatility region. Bollinger Band is expanding on the side of the ticket price is moving up. Sector indices are looking very Okay, even we have few sectors that are leaders, but still none of them are peers on the weekly or daily time frames. Heavyweight stocks are doing extremely well. ICICI Bank, HDFC Bank, and then Reliance are all doing good. So they are either sideways or the bull zones. If you take the top 7 clothing stocks, the mid cap and the small cap, showing that the broad market is also doing good and some extremely bullish all-time high levels. Brokerage is bullish on the Banknifty. I'm bullish on the Nifty. It's a mistake there. Please pardon me for that. This is in previous week. So when it comes to the Nifty, it's bullish with regard to the PCR, which were to the futures OIL. So the futures OIL is showing is short covering, and PCR is pretty much near to the 1. So Nifty's operator is showing bullishness, and Fyers seems to be buying for some reason, which is also goes in favor of the bulls. So what goes in favor of the bears? So the Fibonacci extension 61.8% is hit. That's where the market has started profit booking. Be mindful of that. That's also the top of the trend line channel that we are trying to read on the chart. So there will be a potential retracement that will come. The US market is heated up at the very top in the C close. Be cautious about that. How markets sometimes react. How the market moves in the US market. So Banknifty is not showing that operators bullishness yet. And the futures in the OI bearish PCR is what we have in the Banknifty. So that goes in favor of the bears. So let's wrap it up once again. Market broke out and it's at all-time highs, and it's a very big component of 24K, and it has been breaking out and creating higher highs and new all-time highs since multiple weeks. It's heated up. It has had a spectacular, stellar rally of 40% nearby since last 1 year or so. In the moment when the trend has climbed in the bull zones, but we'll have to assume that market is going to be volatile ahead of the budget. It's the first unit budget is coming from the coalition newly formed government, and raisins and volatility is expected. The market may most likely be consolidating while it retraces. Overall, medium term, if you look at, maybe still be consolidating. So be mindful of that, and then reflect, take long versions when the market is such high heated up levels. So be cautious with respect to personal betting or investing, things like that. We'll get a chance in dips, and that's where we are to get it. Technically, market has shown that it is sustaining, but it's heated up and it's at the very top, and it is cooling wicks and then gaining momentum in the trend. So overall market view is mild bearish because I expect some retracement to come in, and overall it may still be consolidating. Public view is good throughout all your studies. If inflation, COVID, and war, and all this kind of things comes in, and it can come in any time, and then it goes escalated, and then you may have black swans and all your technical analysis. I just include this statement in all my conclusion because black swans will come in any time. So all you can do is hedge your positions at portfolio level and that push at the trade level as well. So that's all I think that you can do. Hedge your positions, spend some money as an insurance to hedge your positions so that you remain with some capital to continue your betting if it goes longer and things go out of hand. So it can happen in any business. So the levels for the next week will be 22,500, 24,000, and 51,000 to 53,000 on the Banknifty. So as long as it's 23,000 and 50,000 is somehow maintained, then we can expect a rally to continue with the next leg after some time, probably after the budget. But after the budget, it's an event. It's a major event, and the outcome may be depending on how the market takes or digests the new reforms and policies and budget decisions. So that you can turn to the budget. It may make another leg only if this level is sustained. It may not if it is not sustained. And after the budget, it can be a breakout or a breakdown. You never know what happens. Right? It's not in our hands. Judge that major events. So always hedge the rest. That's all I have. So I'm also active on the different social media channels. Sometimes I'm more active on Twitter or X, whatever I call it, than I'm active. That much more than I'm active on the YouTube. So you can subscribe and like and comment and share to others in case you like it, the content. Put in your feedback to help us improve better. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.